today, there's probably three models of tokenization that are out there, right? So we just talked about sort of the broker-dealer model, where a broker-dealer essentially wraps the equity security, for example. And as you mentioned, that's really a derivative. It's not real an equity ownership. It doesn't convey the rights of equity ownership, and it doesn't have any of sort of the affiliated shareholder rights, like I want to vote for a proxy, I want to vote on a shareholder vote, etc. The other methodology is it could be sort of tokenized by the CSD. So for example, you have a DTCC that immobilizes the traditional security and sort of creates a digital version of that security that can be used, right, in sort of tokenized form. So that's a second way of tokenization. And then a third way of tokenization is native, right? So you can have essentially what, Galaxy did with their shares, working with Superstate, which is sort of, hey, I'm going to issue sort of a native version of my shares, right, or my sort of equities. And so those are three different approaches. There's no telling which of those approaches sort of will become, or maybe it's going to be all three, right? Sort of, it's anyone's guess, but the point is that sort of all three of those are out there. And so as we think about sort of the path forward, it could be, any of those. And I think sort of as we think about that, we're prepared to just make sure that our clients are able to function sort of regardless of what those options are.
Hello and welcome to another episode of RULEMATCH Spot On, the only podcast focused exclusively on the institutional crypto and digital assets industry. I'm your host, Ian Simpson, and if you want to know what banks, hedge funds, asset managers, and others are doing in crypto and digital assets and how they're doing it, this is the place for you. My guest today is Soto Sanchez. He is the Chief Digital and Strategy Officer at Broadridge Financial. Broadridge is a Wall Street titan with over 15,000 employees worldwide, serving 10,000 public companies, and perhaps most impressively, settling over 15 trillion in assets across its platforms and software every single day. Before joining Broadridge in 2021, Herman was president and head of global corporate development at Cloud9 Technologies, and before that, he was executive director at JP Morgan Chase, where he was involved in strategic investments in cybersecurity, peer-to-peer payments, and market infrastructure. He joins us today from New York online. Herman, welcome to RULEMATCH Spot On.
Ian, it's a pleasure to be here. Thank you so much. Very excited about our conversation that we're going to have today around tokenization.
So Herman, maybe for our audience who's tuning in, maybe from Europe, Switzerland, and don't know Broadridge Financial, I suppose it would be a fair question to ask, first of all, who is Broadridge? And maybe more importantly, why should we actually care about what you do as it relates to crypto and digital assets? Can you give it to us in maybe one or two sentences, just briefly?
Yeah, sure. So Broadridge is a global fintech, right? We're an S&P 500 company, and we provide essential infrastructure that powers investing, governance, and communications on a global basis. So our solutions are helpful to banks, to broker-dealers, to asset wealth managers, as well as corporate issuers in terms of allowing them to innovate, to grow, and to operate. And just in terms of that, what I would highlight is our company really sits at the intersection of financial services, and that's why it's really important, right? By sitting at the intersection of financial services, we power a global network that connects about 10,000 corporate issuers with about 30,000 mutual fund and ETF providers, about 1,000 broker-dealers with about 200,000 financial advisors, about 120,000 institutional investors, and about 170 million retail investors. So we think about all these critical stakeholders in the global financial services ecosystem. They're all connected through our network, right? And so what that means is, I'll give you some numbers, 15 trillion. That's the number of average trading volume per day that we support across equities, across fixed income, and across other securities on a global basis, 15 trillion per day through our platforms. Another number is 30%. That's the percentage of U.S. wealth advisors that use our platform for front office solutions. 20 out of 24. That's the number of fixed income primary dealers in the US that support our platform. And 7 billion. That's the number of communications that we generate each and every single year across financial services. So it just gives you a little bit of a snapshot as to why our company is so important and so critical at the junction of financial services.
And I think actually maybe it was Forbes or somebody like that that said that Broadridge is the financial services company that's so critical and so global and ubiquitous, and yet many people have never heard of them. But you're doing a lot of the stuff, I guess, in the back office, kind of under the hood, so to say, in financial markets. When we talk about TradFi,
that's exactly right. And part of it is, as I mentioned, our clients are institutions, right? Our clients are not sort of individuals, and so a number of institutions know about us. We may not be a household name in terms of individuals, but from an institutional perspective, especially in TradFi, we play such a critical role in making sure that the process operates smoothly on a very daily basis.
Okay, so when we think about that, and we'll get into some more details as we go forward into digital assets, DLT, blockchain, but looking at that kind of big picture, which you have across all of these different markets and these different institutions, you would see how, infrastructure works, settlement works, trading, all of those different things that are critical in financial markets. When you think about those systems today in TradFi, and you think about the innovation that's on the horizon, what would you say about those systems, moving towards a tokenized world or a digitalized world? Are they ready for that? How will that integrate things like, settlement, reconciliation, order routing, all of those things that are huge on a global scale? Where do you think that is at this point, and where do you think it may be going?
It's a really good question. I mean, we definitely sit at the intersection. That allows us to have a really strong perspective and see how that is evolving. What I would say is today, probably most middle and back office institutions, right, that provide platforms are going to require some upgrades, right? They're going to have to build new rails to handle tokenized assets. And the reason for that, if you want tokenized assets to be supported at the same level of reliability, the same level of control as traditional assets, the current platforms are just not built that way, right? When you think about the existing platforms, they do really well in terms of equities, fixed income, funds, etc. They're well versed for things like T+1 asset settlement. They're well versed for batch processing. But when you start to introduce crypto assets, tokenized real world assets, you start to reveal some of the gaps, right, in the existing sort of infrastructure, in the existing platforms, right? More specifically, when we think about things like tokenization or tokens or wallets or blockchain, you start to introduce new concepts, right? You have programmable entitlements, you have 24/7 money movement, you have real-time settlement, you have on-chain data ingestion, you have key management, and so on and so forth, right? These are all things that traditional platforms just weren't designed to do. And thus, you're going to have to sort of make upgrades, real modifications to existing platforms in order to take on sort of these additional features that are novel, right, for a tokenized asset world.
And I can imagine, you're looking at how those things transition since you are sitting at the crossroads of all of these different things. I mean, some things like, say, a T+1 settlement has certain advantages when it comes to netting or capital efficiency and things, but then you have other advantages that come with faster movement of assets on token rails. Are you seeing a lot of movement in that space? Like, how are you going to pull these two worlds together, so to say?
Yeah, well, look, we see a lot of benefits, right, towards tokenization. You've mentioned things like faster money movement. We're seeing sort of benefits around efficiencies. We're seeing benefits around better economics. We're seeing sort of benefits in just transparency, in speed. When you think about sort of the distribution, automation, these are all benefits that we're seeing. The good thing is, because of these benefits, we're seeing sort of significant efforts, in terms of moving things along in order to be able to sort of adopt towards a sort of tokenized world. With that said, there's still a lot of things that need to be figured out. There's still a lot of areas where there are multiple options in terms of what direction it can go. And so people are somewhat waiting for it. And so we're very curious about this as well. And so we sort of early this year, we commissioned a study, a survey of about 300 financial institutions to really understand sort of where they stood in terms of tokenization today, what are some of the challenges, but also what are some of the perspectives around tokenization going forward. And, what I would say is there definitely are a number of institutions that are moving very quickly towards taking advantage and really position themselves to take advantage of tokenization opportunity. And then there are also other organizations that have more of a wait and see approach, especially because there are a number of areas that they think sort of need to be further fleshed out before they're ready to dive in to the tokenization opportunity. And so, we can talk a bit more about that in terms of that survey, some of the findings that we had, some of the challenges that have come up, as well as sort of what the path forward looks like for them.
Yeah, and that was exactly where I was going to go just next. You did the survey, and as I understand, you looked also at some different verticals among financial institutions. So some, as you say, are further along, some not so far along, some maybe in the transition period. Can you just kind of break it down for us, maybe give us the high-level overview of what you found out from that survey?
Yeah, absolutely. And so as I mentioned, we did a survey earlier this year. I think what's really interesting is it really gave us a voice from sort of the actual client perspective in terms of like why tokenization, what are some of the challenges I mentioned, and sort of the path forward. And the way we handled this, we focused on sort of those three areas, and we focused on financial institutions, primarily sort of asset managers, wealth managers, and custodians, right? And so as I go across the three areas that I mentioned, in terms of adoption, what we saw was that custodians are leading the pack, right? Custodians, roughly around 63% of custodians say that today they are already offering tokenized assets. And then sort of when you look at that on a go-forward basis, about another 30% are preferring to offer tokenized assets within the next 2 years. So over the course of the next 2 years, you're probably going to have over 90% of custodians offering some kind of tokenized asset solution, which is, when you think about it, especially if you're very bullish on tokenization, that is great news. That's fantastic. And, that really speaks well to adoption of tokenization and its importance. Now, when you switch to asset managers, on the other hand, only about 15% of asset managers are currently offering tokenized products, but about 41% of them plan to launch them soon, right? So if you recall, again, sort of custodians, probably 90+% the next 2 years. Asset managers, it's about 41% over the next, year or so. And so I think on that perspective, a little bit less bullish in terms of tokenization across the asset managers. And then the third group that we looked at was wealth managers. And there it's, even lower in terms of adoption. Only about 10% currently offer tokenization. And about a third of them plan to adopt something around tokenization for the next 2 years, right? So you got sort of over 90% on the high end, only about a third on the low end. And so there's wide discrepancy around that. And so that was part one, just understanding kind of where are we today. But I do think it's pretty encouraging on the custodian side just to see that. And frankly, overall, the numbers, even if the bottom range is a third, that still speaks a lot to where tokenization was even 18 months ago, right? So I do think sort of that's encouraging nevertheless, but obviously a lot of room to grow. The second place where we dove into was sort of what are some of the challenges, right? So how do we get these numbers up? And what you see is that the majority of institutions, it was about 73% of them, said that the biggest challenge to adoption was regulatory uncertainty, right? And this is something that's not novel, right? I think a number of people have heard this beforehand, right? And so regulatory uncertainty, and again, these are institutions sort of more on a global basis, right? So it's not just U.S. regulation, so it's more on a global basis as well. Other challenges included things like security, right? Cyber concerns. That was probably sort of number two. You also had firms had infrastructure gaps that they needed to close. The lack of common standards, that was also another sort of significant area for folks to address as a challenge. And so there were a number of challenges. Regulatory uncertainty is the biggest one. But again, you still had others, cyber, security, infrastructure, common standards that played a role in that, which then led us to the third area of kind of where we focused on in terms of our survey, which was, all right, what's the path forward? What does that look like? What's the future of tokenization? And so there were a couple of highlights there that I'll share. The first one is the group as a whole, felt that sort of blockchain sort of will be the primary record of ownership, right? And so about 3/4 of respondents said that blockchain is likely or was very likely to become right, the primary system of record for digital assets. And I think that's a very big thing when you think about that in terms of like how is ownership recorded today. If it's the primary, that means it's the golden record, right? And that's a big deal when it comes to sort of financial services infrastructure. So that was one takeaway there. I think another takeaway was around the changing face of the distribution model, right? If you look at asset management, about 75% of asset managers said that direct to investor distribution is going to play a key role for them, right, as part of their tokenization strategy going forward. And so when we think about the way distribution works today, you have intermediaries. The fact that if you're an asset manager, you can go directly to an investor, that's a big shift as well, right? And tokenization is something that's going to facilitate that. So there's that belief as well. Another insight that came out of that, just from an asset class perspective, was really the focus on things like private assets and real estate, right? People felt that private assets and real estate were really ripe for sort of advancement, through the use of tokenization. When I say advancement, really it's about the democratization of investing, right? It's about getting those assets into the hands of more investors overall. And there was a strong sort of sentiment that, these two asset classes are very conducive sort of to leveraging tokenization just to do that. And then the final piece I'll just emphasize is about sort of the path forward is challenging, right? I've talked about some of the challenges that exist today for adoption in terms of regulatory standards, et cetera. And so, yeah, the path forward is going to require some common standards, some regulatory clarity, the ability to address the technological gaps, but also it's going to require some change, some cultural change. As institutions think about adopting tokenization, it is not a side project. It is core to your strategy, especially if you're an infrastructure provider. And so that was another key piece here, which is sort of like the change aspect of this from a culture point of view is pretty substantive as well. So in short, I think, look, our findings, I think, are very exciting for what is a very dynamic future of tokenization. So we were pretty excited about that.
And that's very interesting. I mean, you, of course, again, having that kind of bird's eye view of the entire market and the many different things that you do can take that broad survey. And it's very interesting to see the range of feedback there. Just diving into some of those segments, custodians, asset managers, wealth managers. I mean, we know big names like BNY Mellon have been already in the space for quite some time, have been doing things around custody, probably are getting themselves set up for many more things. That's maybe not so surprising. When it comes to asset managers, you said that number is still relatively low. On the other hand, you have some of the biggest asset managers, BlackRock, Franklin Templeton, so on and so forth.
Franklin Templeton, Wisdom Tree, exactly.
Right. Yeah, doing things with tokenized money market funds, which is quite exciting. What do you think it's going to take for those groups to grow, to build out their capabilities, and for it to eventually trickle down to wealth managers? Maybe they're the most conservative, right? They're the last adopters. But how do you think it kind of develops step by step?
That's what sorry to say.
How do you think it kind of develops step by step? I mean, will it take big names like BlackRock, Franklin Templeton, and so on to kind of push the rest of the asset managers in that space? Will it take a big wealth manager like, say, a UBS to eventually tip the scales and push things forward? Or what is your view?
Yeah, so I think there's two aspects of it, right? There's a technological aspect to it, and then there's an operating model aspect to it, right? And so I think from a operating model point of view, it's about these institutions feeling very comfortable that they figured out sort of what's the right operating model for them to operate in a tokenized world, right? So you look at the Franklin Templetons, the Wisdom Trees, the BlackRocks, they're coming out. Here are the solutions that we think are the kind of solutions that we should be offering sort of in this tokenized world. And you will see that. And by the way, there's been some uptake, but obviously nowhere near the kind of uptake that obviously equates what's happening sort of on a more traditional on the TradFi sort of real world asset world. So that's where I think the second aspect of it comes in, right, which is sort of the technological aspect of it. And there, what you have is there's still a couple of issues that need to be addressed around, I've talked about legal, regulatory clarity, et cetera, which itself needs to be addressed. But I think from a technology point of view, you have things like interoperability, right? And so interoperability across networks, I think it's pretty big. And the reason that matters is because you want to be able to seamlessly move collateral, right? And so right now, without interoperability or with limited interoperability, collateral kind of is trapped within a specific network. What you really want is interoperability across all these networks, which then sort of facilitates the flow of collateral, right, of these assets across the various networks, which really then gives you the full network value, which then sort of really unlocks a lot of value, enhances liquidity, et cetera. And so I do think, there's an aspect of that as well, right? So it's like, what's the right operating model? Yes, I need to address some of the challenges like regulatory clarity, but there is still a technological challenge, and which is around sort of things like interoperability. And there are solutions out there in terms of bridges. I think this stuff will play a bigger role on a go-forward basis. Given sort of all the different types of networks, all different types of chains, public chains, private chains, public permission chains, et cetera. All of this needs to be figured out as well. And I do think from a asset manager point of view, the operating model is pretty critical for them, but for everybody, and that said, also the other aspects that I mentioned are very important for them as well to see this really fully be realized.
Mm-hmm. And I suppose Broadridge, as a technology provider, would be looking at some ways to build those bridges and help to connect those different ecosystems. I mean, people build a proprietary solution, and if you are a really big asset manager or bank or something like that, you can, so we say, get away with it, since you can make an internal business model just on your own proprietary solution. But as money flows around different countries and different ecosystems, you do want it to be connected, of course. And that's, yeah, I can see what you mean. It's a critical thing to link everything together, so to say.
Yeah, and I think it's very analogous to what we do today for traditional assets, right? For traditional assets where we sit at that intersection, we're able to sort of connect sort of these disparate networks of key stakeholders, right, to be able to add efficiency to the system. And sort of we view a similar role as well when it comes to digital assets also, right, which is our ability to be able to facilitate seamless integration between sort of traditional finance and digital finance and digital assets. And, we think it's a tremendous opportunity, significant opportunity, and the role we like to play, right, as an infrastructure provider is one that we build once and it's used by many, as opposed to sort of everybody builds their own and sort of we have multiple versions of the same thing. Our view is always to sort of try to sort of create sort of utility factor and create sort of efficiency by building once and having it be leveraged by many going forward.
Mm-hmm. I don't know if you drill down into this in the survey itself, but of course you see that across different ecosystems, different jurisdictions, different approaches, some more conservative, some more liberal and fast moving. Do you have any insights on how, not just across the segments of financial institutions, but maybe between Europe and the United States or Asia, how custodians, wealth managers, asset managers are moving, how they're preparing, how it's differing perhaps in those different areas?
Yeah, there's definitely differences that we're seeing sort of across these areas. I think in Europe, if I start there, we're seeing sort of MiCA, obviously, or MiCA, and you have some experimentation that's happening. So, for example, in Europe, you have investors and platforms that have shown a willingness to experiment with tokenized products, right? And so you have, especially the tokenization of U.S. asset classes, so U.S. equities. You've seen Robinhood, Kraken, Ondo, Denari, right? They're all providing European investors with the ability to participate in U.S. equities, right? Essentially, they're sort of wrapping sort of U.S. equities sort of more like a derivative product overall. And so that's something that's pretty at the cutting edge in terms of what's happening there as well. In terms of MiCA regulation, it's much more focused on crypto assets. So there is some ambiguity around sort of tokenized traditional assets. So I think that's something that needs to be closed. But nevertheless, you're seeing an environment, I think, in Europe where there is sort of, they're promoting experimentation as well. I think in Asia, you also have a good amount of experimentation. You're seeing sort of CBDC pilots that are happening in Asia. You're seeing sort of aggressive adoption of specific types of tokenized assets that's happening there as well. And so I think we look at sort of Singapore, Hong Kong, parts of the Middle East, et cetera. They're trying to sort of position themselves as very sort of tokenized and digital asset friendly as well. And then when you look at the U.S. In the current regulatory regime, and I think for quite some time, folks were very starving for regulatory clarity, right? And sort of in pretty fast order, you've had the passing of the Genius Act, you have the Clarity Act, which is in motion. all of this, I think to me is showing that sort of innovation, especially here in the US, is catching up. I think the Genius Act is paving the way, right, for stablecoin adoption. As a result of that, you're starting to see sort of a lot of firms start to introduce stablecoin rails because there's much more clarity there. And then with the Clarity Act being in motion, you also have the proposed innovation safe harbor from the SEC. That's part of Project Crypto. You're seeing more guardrails, right, around tokenization experimentation, which, in turn to me is going to drive a lot more innovation, a lot more adoption downstream. Even last week, you saw the no action letter from the SEC for DTCC and their approach to sort of tokenize assets, right? So I think that's just the beginning of what's going to be sort of a lot of experimentation in this space. So when it comes to the US, I think that regulatory clarity is starting to arrive, and you're seeing folks very quickly move to take advantage of that, or at least sort of experiment sort of within the confines of available guardrails, which is great for everybody on a global basis.
Mm-hmm. And you even have JP Morgan, one of the world's largest banks, now just coming out with their own tokenized money market fund on Ethereum, which even maybe 6 months ago, 9 months ago, would have almost been unthinkable to some people in the space.
Yes, that's right. This is moving so quickly. Yeah, the JP Morgan announcement, which just came out, you had the, no action letter from SEC for DC last week. You had sort of Paul Atkins give a speech, I think it was December 8th, where he said things such as sort of, tokenization, will be the future. It may be sooner than we think. It may not be 10 years, maybe a couple of years, right, in terms of that. And so I do think there's sort of a very strong element here around that. And I think what people are seeing is that tokenization has so many benefits, right? From an infrastructure point of view, it has the capacity to really sort of develop our financial systems in a very, very positive way.
So let's just drill down into that to tokenization itself, and maybe we separate a little bit from what you see in the survey or among the market in general, and from what you as Broadridge are looking at in particular. I mean, what will tokenization do to markets? And I get back to one point from the survey. I understand that many people said one of the things that was top of mind for them was intraday liquidity. So talk to me just a little bit about how tokenization can play into that intraday liquidity and what that could potentially mean for markets globally.
Yeah, absolutely. So in terms of our survey, about 61% of respondents cited greater liquidity as a key benefit of tokenization. Actually, that was only second to transparency. And so in terms of liquidity, right, what that means essentially is that it's greater capital efficiency, right? One of the key benefits of tokenization, that's about faster cash, faster asset movements, which enable quicker sort of reinvestment opportunities, sort of more efficient use of capital overall, right? Again, that's one of the many benefits of tokenization. Other benefits include, as I mentioned beforehand, instant settlement, 24/7 markets, automation through smart contracts. But in terms of the specific question, I think unlocking sort of collateral, right, is what drives liquidity. Liquidity sort of is then what drives sort of financial activity. Repo is one of the very first areas that we focused on, and we saw liquidity as sort of one of the key sort of use cases that can benefit from tokenization. And so we released an application a couple of years ago called Distributed Ledger Repo, which essentially is focused on tokenizing sort of repo agreements in order to sort of enhance velocity and drive more capital efficiency. And that's something that we have just seen sort of grow and grow substantially to the tune of 380 billion, right, in repo transactions tokenized per day. So it's been a pretty significant success for us. It's probably sort of the largest sort of tokenization platform on the planet. And it's really sort of facilitating sort of global, capital markets.
And those are things that maybe help money move faster in ways that it had moved before. So to say, like, I hesitate to use the comparison of making faster horses, but in some ways it's moving things a little bit faster in the same way. Then there are things that you can do potentially with blockchain that you couldn't necessarily do before. I know Roger Baston here on the podcast a little while ago was talking about their money market fund with intraday yield and kind of the things that can do. What do you think that could unlock, and what other features do you think from a blockchain perspective could be built into finance and open up kind of a whole new world of things for markets.
Yeah. It's like you're a mad scientist and cooking things in the laboratory is the way I think about this. Because, first of all, I think intraday yield is a great example, right, of the kind of benefit and economic benefit that is superior to that of a traditional asset. And so, really, it's like the mind is your only limitation here because there's no shortage of examples where you can get superior benefits. They can be superior benefits when it comes to speed, when it comes to transparency, when it comes to distribution, when it comes to automation. Some examples of that, it could be, if I stick with the yield example, it could be sort of real-time yield updates that you can just get those sort of at any point in time. Or you can look at real estate, or fund shares that can be bought fractionally and they can be settled instantly, right? That's another advantage. Or you can look at sort of tokenized private assets, which I mentioned earlier beforehand. And I do think tokenized private assets is a really, really good example of that. That really encapsulates sort of the concept of democratization of investing, right? You just have a lot more options sort of at your disposal, a lot more ways to benefit from that as well. We think about private assets, for example, is an asset class that's poised to grow to anywhere from 25 to 30 trillion by 2029 or so, from about 15 trillion today. And that sort of includes private equity, private credit, infrastructure, real estate, venture capital, right? And so when you think about sort of long-term projections around tokenized assets are poised to increase depending on sort of who you talk to, upwards of 15 trillion, let's say by 2030, with a lot of that growth expected to come from private assets, right? You also have treasuries, you have other things, but private assets plays a key role in that. And the benefit there is sort of private assets to the most part, has been sort of this immobile, illiquid asset that really is the domain of really ultra high net worth individuals, right? You may have a investment minimum of $1 million to invest in some fund. Through tokenization, you can now sort of lord that to portfolios that are much smaller. In some instances, you have some opportunities, with, less than $1,000 to invest in private equity vehicles because you're able to tokenize it. You're able to have a totally different distribution approach, and you'll be able to fractionalize ownership as well. So these are things that I think are extremely exciting, right? So, and that covers, again, the distribution benefit that I mentioned, right? We've talked about speed, we've talked about automation, and we've talked about sort of other economic benefits. So it's just limited to sort of how do we think about that and sort of our own internal limitations or minds. So just so many advantages. And, the way I like to think about this is sort of, what happens if we don't, right, pursue tokenization? What happens if we don't focus on this and somebody else does, right? There's also an element of competitiveness for our institutions to remain competitive, which is sort of we have to make sure that we're on top of this as well.
Mm-hmm. Maybe that played into the decision from JP Morgan, but we won't have time or the opportunity probably to ask Jamie Dimon about that one. Just on the back of what you said, two questions. Would you say it's fair to say that, with democratization of private markets, for instance, and so on, this could potentially lead to an even greater financialization of things and of markets and of assets, even more than it has been in the last 10, 20 years?
Absolutely. Absolutely. I mean, the concept of really tokenization of any real world asset. And as sort of this evolves, the ability to trade, right? The ability to do financing based on that asset, the ability to use it as collateral. You can just start to pile on the different use cases because a tokenized asset is a tokenized asset. Whether it's a tokenized equity or a tokenized fixed income instrument or a tokenized piece of art or a tokenized piece of real estate, you can start to see sort of how all of that starts to become very synonymous. And it's really about then what are the use cases that you can build off on top of that tokenized asset, which again is what makes this very exciting because you're talking about opening up pools of collateral, pools of liquidity that really have been immobilized up until this point. And so that's one of the many benefits of tokenization, but a substantive benefit to then sort of just start to further open up the financial ecosystem. So pretty exciting. Look, we do have a number of questions to answer, right, in order for this to be resolved. As I mentioned beforehand, you got operational questions, you have technological questions, regulatory questions, but I'm pretty confident that those will be addressed in due time. And this is going to be sort of a pretty significant sort of opportunity to kind of rewire the plumbing. But I'm not saying that real world assets are going to disappear either, right? I think there are a number of use cases I think where real world assets will continue. Maybe not the majority, but they might continue. And this is a very similar case, by the way, that you've heard when it comes to trading. Most people would imagine that trading today is electronic, but it's not true. You still have a large percentage of trading or material percentage of trading that take place via things like voice, right? And so you may wonder, why would that happen? So there are specific reasons for that. And so similarly, I do think over time, you still have some kind of a hybrid environment where you have real world assets and digital assets operating sort of next to each other.
Mm-hmm. And the second question, and this is maybe more complicated, but when you think about even the platforms and the software that you provide today, whether it's kind of reconciliation or settlement and those things, there's probably still quite a bit of integration and updates and changes that need to be made to those systems, even like core banking systems and so on and so forth, to even handle tokenized assets, right? Is that something that you're already working on now to kind of, put the scaffolding on underneath this great new stuff that's coming out?
Yeah, absolutely. One of the things I feel very confident about, and for example, some of our platforms are already able to handle digital assets, right? So, and so we have efforts ongoing that will ensure that our existing sort of platforms, our book and records platforms, our middle back office platforms are digital asset enabled or are able to sort of operate with tokenized assets. So that's one thing. I think number two, we're also sort of pushing forward on sort of working to enhance sort of that seamless sort of interaction between traditional and digital assets when it comes to sort of what we do today, which covers things when it comes to sort of from issuance, across trading, across sort of the wallet custody function, all the way through sort of corporate actions and asset servicing, right? We play a role in each of those functions for traditional assets today. And we believe, there is a role for us to play across those functions as well and when it comes to a digital asset future also.
Mm-hmm. You mentioned earlier Robinhood and Kraken and so on, and they've brought tokenized assets also here to Europe. You mentioned those are kind of wrapped, and so I understand, digging a little bit into the details of those things, they're kind of tracking the price and value of those assets, whether it's stocks or whatever, meaning that there still isn't yet kind of the infrastructure like a full-fledged token exchange for regulated token exchange for digital assets. How big of a game changer would that be if that's like kind of global or at least regional infrastructure were in place to really accelerate things?
Yeah, look, I think there's definitely a lot to unpack in this portion around tokenization. Today, there's probably three models of tokenization that are out there, right? So we just talked about sort of the broker-dealer model, where a broker-dealer essentially wraps the equity security, for example. And as you mentioned, that's really a derivative. It's not real an equity ownership. It doesn't convey the rights of equity ownership, and it doesn't have any of sort of the affiliated shareholder rights, like I want to vote for a proxy, I want to vote on a shareholder vote, etc. The other methodology is it could be sort of tokenized by the CSD. So for example, you have a DTCC that immobilizes the traditional security and sort of creates a digital version of that security that can be used, right, in sort of tokenized form. So that's a second way of tokenization. And then a third way of tokenization is native, right? So you can have essentially what Galaxy did with their shares, working with Superstate, which is sort of, hey, I'm going to issue sort of a native version of my shares, right, or my sort of equities. And so those are three different approaches. There's no telling which of those approaches sort of will become, or maybe it's going to be all three, right? Sort of, it's anyone's guess, but the point is that sort of all three of those are out there. And so as we think about sort of the path forward, it could be, any of those. And I think sort of as we think about that, we're prepared to just make sure that our clients are able to function sort of regardless of what those options are. Now, what does function mean? Well, one of the key aspects of what function means here is that Hester Pierce has said, and it's been said sort of across the SC as well, which is, hey, we expect sort of these sort of tokenized equities to have the full rights associated with traditional equities, right? And so when you look at something like a wrapped equity, which essentially doesn't convey any real shareholder rights, right? That's something that's going to have to be addressed in some capacity, right? Because you're going to have to build in corporate actions, right, across each of these instruments, the ability to vote on a proxy, the ability to, do shareholder voting, the ability to receive dividends, et cetera. These are all things that are critical and they're going to happen. And so those are going to have to be worked into that infrastructure and to those tokenized instruments going forward. That's what I think is a missing piece right now that sort of once sort of integrated into that sort of is going to really help advance this going forward.
Yeah, and I think we're pretty excited about that in Switzerland since there's some legislation already in place that makes that possible. And, just small advice to Paul Atkins and Hester Pierce, you can come to Switzerland anytime and check stuff out and have a chat. But anyway, yeah, I think there are lots of different approaches, and we'll see. Obviously, scale and popularity and ease of use are going to be interesting as well. But, if you hold an equity, you probably want the dividends from it, and maybe you want to vote at some point. So all of those functionalities make sense. Just in the last few minutes, I wanted to circle back to your repo platform, because that's an interesting use case, of course, and obviously very interesting numbers that you've put up so far. Just tell me a little bit the background of how you built that and got started, and how it works in the ecosystem.
Yeah, absolutely. So as mentioned beforehand, we created our distributed ledger repo. We thought that was one of the very good use cases up front when it came to showing the power of tokenization. So we wanted to transform the repo market infrastructure by using tokenization and smart contracts. And so that's how we started. So essentially, our application allows participants to agree, to execute, and to settle repo transactions on a single shared ledger. And so it is the largest institutional platform today for tokenized assets. And the primary benefits that it has, right, in terms of advancing collateral mobility and velocity, that's really what it's driving at, which again is all about liquidity. And so that's why we set out to do that. We're currently, working to expand that solution to provide additional forms of repo, right? So you have intraday repo, you have same day repo, you have, sponsored repo, et cetera. So there's different kinds of repo that, again, sort of will continue to add incremental liquidity into the market as sort of we bring on those additional capabilities.
And is that's against regular fiat, right? Not with a stable coin at all involved, or is that something that you look at?
Well, the process is end to end. And so right now there is the cash leg of the transaction. We do support stable coins, and we support other digital cash options for the cash leg, meaning sort of like once you've agreed and sort of like for the flow of cash as part of the repo transaction, that can be done on chain as well, right? And so the benefit of that obviously is that when you sort of integrate the digital cash, that supports atomic settlement, which is a key advantage, of this over traditional methods. It also just lowers risks as well, right? And so we do support that. A couple of examples that we've publicly announced include JP Morgan Coin. So last year, sort of we announced a digital cash solution, developed by, through JP Morgan's Onyx, blockchain unit that basically allows for settlement, on our platform leveraging JP Morgan Coin. Another partnership that we announced was with Finality, and that was announced sort of earlier this year. Where again, pretty similarly, the collaboration sort of enables real-time settlement, right, for these sort of intraday repo payments using Finality's payment services. And so those are two examples of that. But I think as you highlighted, the key benefit there is like you have a on-chain cash leg as well. And so you have a process that's pretty much on-chain sort of end-to-end, which is significantly sort of more efficient than sort of the traditional approach.
Mm-hmm. Mm-hmm. That's grown quite a bit. You said 300 billion a day, which is very, very significant. That's
380 billion per day, over 7 trillion per month now is the volume that we are doing in the repo markets.
Okay, across I would say probably hundreds of institutions, or how many are kind of involved in the process so far?
So we've highlighted a few institutions in terms of publicly, and so we haven't sort of shared sort of the totality of institutions that are on the platform, but we've shared the names of a couple of institutions on a public basis.
Yeah. Okay. Very interesting. That, of course, dovetails quite well with some conversations we had earlier on the podcast with Chris Zulke from Cumberland, and he's talking about many of the same things with collateral mobility and so on and so forth. So it'll be interesting to see how that develops. Just as we kind of wrap up, we give our guests the opportunity to look into the crystal ball. You've already done that a little bit with the survey and some of the things that institutions are saying. Is there something that you personally or at the company you're looking into, maybe the 6, 9, 12-month range, maybe something that people aren't paying much attention to that we might look out for?
I think we're focused on a couple of things. Number one, we're very much focused on enhancing some of our existing platforms to make sure that our clients have a seamless sort of integration between sort of traditional and digital assets, which I mentioned beforehand. And I think that's just something that is going to be very critical for everybody else to focus on as well. I think number two, given sort of how quickly things are evolving in this marketplace, we're also very much focused on sort of solutions that sort of help to sort of redefine existing workflows, but for a digital asset future, right? So what's the workflow for a wealth manager or an asset manager or a broker dealer, right, on the digital asset side, right? Because the workflows are going to change. It's very different. And so like, how do you support those workflows? I think that's extremely important as well. And then sort of another aspect that we're very much focused on is this interoperability aspect that I mentioned beforehand as well, right? So we're members of the Canton Network, which is a public permission network. And so our distributed ledger repo solution runs on the Canton Network. And so we do believe that interoperability, especially something like Canton, which is sort of purpose-built for financial services, right, to deliver the security, the privacy sort of that we all require, is the kind of solution that we're going to start to see sort of across the marketplace to just facilitate that, get folks on that common network as well. And so I think those are some of the things that we're going to start to see. Again, if you put that connection back to what I mentioned beforehand, is like, all right, let's start attacking the challenges. Like, what are the challenges to sort of fulfilling the potential of this? Regulatory clarity, it's on the horizon, right? We're gonna check that box. It's gonna take some time, but we're gonna check that box, and we need to check it on a global basis because even things like cross-border transactions, right? We need sort of better alignment on a global basis. But regulatory, okay, check. Technological issues, which I highlighted, hey, we're working on those as well. All right, operational model challenges, that's what we're working on now. And I think every institution sort of like, what is my operating model in terms of this on a go-forward basis, right? Number 4, what are the specific solutions that you're going to offer your clients, right? So if you have clients who are wealth firms, like what are they looking for, right? Based on our survey, custodians, asset managers, wealth managers, they're all going to be increasing sort of their activity in tokenization. So what is it that they need? How can we be helpful to those clients as well? So these are all things that we're keeping sort of top of mind on a go-forward basis. But what's also very clear is that things are moving very, very quickly. It's exciting for us. We are big fans of tokenization, but so it's exciting just to see the level of change and try to keep up with what feels like new developments happening on a daily basis. But I think it's because a lot of folks are excited as well, right? Just seeing sort of the impact that this can have on financial, markets infrastructure in a very, very good way. And so, there's no shortage of areas to focus on in terms of like what the crystal ball is. But what I do think, we're really focused on addressing the challenges because this is not just concept, this is becoming a reality.
Mm-hmm. And keep your running shoes on because it's not going to slow down.
It's not slowing down at all whatsoever. If anything, it's probably going to pick up steam. It's going to accelerate, and we're ready for that.
Very good. Very good. Well, Herman, very, very glad to have you on the show today, and it was a privilege to talk to you. Look forward to maybe circling back sometime in the future and have a follow-up conversation and see how things have developed in the meantime.
Absolutely. And thank you so much for having me. This has been a blast, and happy to speak about this anytime. Happy to come back for an update in the future as well. Thank you.
Super. Thank you very much.